Hi, good afternoon, everyone. I'm Anisha Jain. Now that the Minister, the Ambassador and Manoj have set the direction and geared us up, it's time now to cruise along to the next topic of conversation, betting big, identifying new investment frontiers. For the next 20 minutes, I'll be joined by a slew of experts to talk to us about where the smart money is headed, which are those new emerging trends, sectors, asset classes, geographies, and more importantly, where lies the opportunity to make higher returns? To get us started, let me welcome on board Siddharth Balachandran. He's, of course, the Executive Chairman and CEO at the Buimerc Corporation. Siddharth, of course, has his base in UAE, but he has his roots back in India. And he has exposure to multiple asset classes and geographies, so best place to talk to us about just that. Siddharth, hi. Great to have you here.
Thank you. Pleasure to be here. Hello, everyone. Thanks.
Well, Siddharth, we're speaking at a time when, the global landscape is shifting very fast, right from the political upheaval in US and UK to the geopolitical tension in Middle East and Eastern Europe. With this context in mind, do you think the new emerging, investment opportunities are more likely to come from global South versus global North? And how's India and UAE placed amidst all of this?
Okay, so it's a very simple answer. I might be seen as biased, but I'm a global South bull, if you want to call me that. Because I believe that, I think we are in a state of transition. I think the days of transactions have slowly subsided. So I think we are now going into that very intangible space of valuation. And I believe that the Global South as a concept covers almost 40%, 50% of the world population, and the quality of that world population of the 50% is increasing leaps and bounds. So if you ask me where I would, which side I would trust, is definitely the Global South. So yeah, that's my answer. So.
Okay, let's deep dive a bit there. So talk to me about the investment process which you really follow when you're looking at these new frontiers, in the sense which criteria or what factors and parameters you look at?
Impact.
Okay.
I think it is the larger the sphere of impact of that particular institution. Of course, you start with the jurisdiction, you start with the country, the basic macro fundamentals of that country, the regulatory framework in that country, because when you invest into a space, when you invest into a country, you want to make sure that the vessel is strong. And what I mean by the vessel being strong is the regulations, the policies, the procedures at the macro level. I'm not talking about the micro industry level regulations, at the macro level. So you feel a sense of safety and reassurance. So that's the first thing I look at. And the larger the sphere of influence, what I mean by that in terms of impact is when I invest into, say, for example, India, I would like to invest into a firm, an institution that sort of mirrors India as a whole. Because I think the power of India is, apart from the diversity and the obvious successes that India has had, I think the power of India as a concept is the untapped potential in terms of population. The human capital. For example, you've got, so one of my successful investments is the stock exchanges. Now, it is a platform, yes, but generally when people say India is doing well, they mean the Sensex or the Nifty is doing well. So that resonance of a wide impact is what I look at when I invest into a company. And of course, thereby, so the first sort of cog in the wheel is that, and then of course you have to do your due diligence in terms of the micro aspects of that country, the management of that company, the management, the debt, which is a big no-no as far as I'm concerned. So yeah, that's the process I follow. in a nutshell.
Okay. So you, of course, betting big on the financialization of the savings theme in India. Anything else that you're watching out for? Any other major global theme or anything specific in India that's interesting you right now?
So I think as a theme, I think staying invested in India is probably the broadest theme I can give you. But in terms of sectors, I think banks and financial institutions are something that I will always have faith on. And the nationalized banks, again, resonate with India as a whole. So that is something that I'm closely watching. I haven't yet started taking big stakes there, but I'm getting there.
Yeah, and over the last few years, we have seen the efficiency levels in all those nationalized banks go up pretty much. But you know, hold that thought. There's lots more to unlayer there. But before that, let me welcome the rest of our panelists on board as well. Shivani, Bhasin, Sachdeva, the founder and CEO at India Alternatives, Vikaas and Sachdeva, the managing director at Sundaram Alternate Assets, and Alok Sanghi, managing director at Resolute Corp. Hi, guys.
Welcome.
Hi.
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 Anisha.
Hi. Hey, Alok. Please, welcome. So Shivani, let me start with you because we were just talking about the regulatory action in India. But one of the biggest talking points, which I'm sure which is there on everyone's mind right now, is the implication of Trump 2.0. Do you think this is something which creates a threat or an opportunity which merits to relook at portfolio allocation both at a tactical and a long-term basis?
I think, you know, I'll start by saying one man's meat is another man's poison. And I think what was very interesting, before this we had a wonderful lunch where we shared ideas of collaboration. I think that was also very ironic in the context of Trump, you know, 2.0, right? Where we talk about much more protectionism. And here is an area that we are actually talking about all kinds of collaboration. We talked about collaboration on the digital side, new age companies, technology transfer, private equity, and so on, right? If you look at what's happened, we talk about, you know, Trump increasing tariffs and so on, but interestingly, Biden stayed the course with that. So if you look at the last what happened, and if we all look at China and we talk about China plus one, but China's exports increased during this period. What happened was, interestingly, you see China's exports increasing, imports into Vietnam increased, exports from Vietnam increased. So there was a lot of rerouting that happened during this period. Is this an opportunity for India? Absolutely, it's an opportunity for India. I am very bullish. I have set up a mid-market private equity platform in India that invests across various themes. And I'll let you talk to the other panelists, but come back to exactly what we're excited about and what we're betting big on. But I think this is a wonderful time and an opportunity for India. Also a wonderful opportunity to collaborate with this region.
Okay. So I think the consensus so far has been that staying invested in India is the big yes. But then, Alok, what explains the exodus of FII money that we have seen out of India over the last couple of months? Is there something which has changed in the fundamentals of the country, or this is one of those cliched buy the dip moment?
No, I think Indian markets are expensive. There's no doubt about it. We are the most expensive market in the world. Having said that, we also have the biggest growth potential possible. So I think some profit booking is happening at the FII level. Small and mid-cap sectors specifically are very expensive in my view. And so many people are trying to recalibrate their portfolios. Also, you should remember that we are coming to the end of the year. And so people generally break for holidays and they will come back again in January to relook at their portfolio. I think in India, we have a tremendous opportunity. The Indian market is likely to double in the next 6-7 years, which means that what was created in the 75 years of our existence since independence is going to get doubled in the next 7 or 8 years, right? So now that's a massive opportunity. One new India is getting created. And if you extrapolate this, we are looking at becoming a 10 trillion economy in next 15 years. So I feel that there is nothing that we should be betting against or rather I would say that we should go all in on India is how I would look at it. I think there is huge growth possible in every sector. I don't see that there is any sector which is devoid of growth. And so yeah, we are extremely bullish on India.
Okay, you are saying all sectors look good. So let me toss it to Vikaas to get a bit of more understanding there. Any specific sectors you want to call out that look the most interesting? Any theme that you're watching out for?
Well, if you ask, somebody who's from India this question, they'll usually say the sector you should bet on is India, which is usually, and like he says, every sector looks promising. But I think what one needs to understand is it's never going to be a linear journey. We tend to extrapolate what has happened in the last 3 or 4 years as to what will be. We tend to ignore global macroeconomic factors. We tend to ignore things like currency. My sense is that there will be a lot more good quality paper which will be issued. If you start looking at the primary markets, India, the capital has never been a problem over the last 8-10 years. Deployment has been a problem. So I think the primary market is supplying that quality of paper to you. But the expectation that everything will be rose tinted, when you start looking at life from a rose tinted point of view, you will tend to be disappointed. For example, if you start asking around people in the country today, there is an expectation of earnings slowing down, at least in the next quarter or two. Now, if you are an India bull and you want to stay the course, the next couple of quarters will be an ideal opportunity to go in and buy. Most of the FIs you just asked him about, they've been around for 10 years, 12 years, 15 years. The last 4 years, people have made 4 times their money. So it's but natural they'll book profits and go. So I think this is the time to get in, buy the dip, but stay the course. You cannot expect, that the markets will rebound every time you buy the dip.
Fair enough. Shivani, you were talking about the various investment opportunities you see in India. Talk to me about those global themes that you think are likely to disrupt over the next 5 to 10 years. And what's the most talked about sector when it comes to the private market?
So I think we bet big on 3 or 4 themes, one of which is, the confluence of technology and data. And this is a big global theme. If it's true globally, it's even more true in India. Okay, and I'll tell you why. In the early 2000s, global data consumption was very low. It was only 5 billion gigabytes of data in 2002. By the end of this year, any guesses what data consumption will be? Any guesses from the audience? So 2002, it was, I'm talking about global data, 5 billion gigabytes of data. And by the end of this year, any guesses? You want to guess?
5, maybe?
5. It was 5 billion.
Okay.
I'm saying
it's become
in
5.
2002, it was 5 billion. 22 years later, by the end of this year, data consumption is expected to exceed 175 trillion gigabytes.
Wow.
That's 35,000x. Okay?
Sorry, 5 billion to 175?
175 trillion.
Wow.
That's 35,000x. Okay? And naturally, in 2010, one of the most valuable companies in the world, in 2010, that wasn't very long back, one of the most valuable companies in the world was ExxonMobil.
Yeah,
It seems laughable now, right?
Yeah.
And today it's NVIDIA.
NVIDIA.
So this is the backdrop of what's going on globally. But in India, it's even more exciting. So if you look at worldwide mobile data pricing to 2023 list, reveal that India has the 3rd lowest internet data rates in the world, behind Israel and Italy. And the average price of 1 gigabyte of data in India is 17 cents or 13 rupees. So this is leading to widespread adoption of internet, not just in the metros, but in tier 1, tier 2, tier 3 cities. So we are backing lots of companies that are using technology stack to actually go into the hinterland. So that's really exciting, right? Of course, the government of India has launched a whole slew of other initiatives on the tech front, like DigiLocker. We're all familiar with all those things, right? And against this backdrop of technology and data, you're seeing change happening at a phenomenal level. So I'll pick up, I think, something which was mentioned earlier. You talked about backing exchanges, and so we also back a lot of these financial services platforms. I'll give you an example of how this technology and data lends itself to investment opportunities in the country. We were the first private equity fund in the country to invest behind Sibyl. India's largest credit information bureau. And if you look at that journey, it has been nothing short of incredible.
Right.
So if I take 10 years, if I randomly pick 10 years, and I'll pick 10 years before COVID, okay? 2010 to 20, something like that. In 2010, credit applications in India were 1 million per month. 10 years later, it became 1 million credit applications per day.
Sure.
And I don't think it will be too long in the future before it becomes 1 million credit applications per hour. And what is CIBIL? What are these platforms? It is nothing but the marriage of technology and data. So what is it? You have middle class Raju who goes to State Bank of India to take a loan to buy a TV. But the magic is he doesn't only go to State Bank of India, he goes to State Bank of India, he goes to Union Bank, he goes to Punjab National Bank. All these banks at the back end, every time he goes, there is a data capture or trade line, right? And so when we invested in such a company, there were 400 million trade lines. Today that's 4 billion. And this is just one example. And there are countless examples where you put together technology and data and magic happens,
Sure.
right? And that magic we're seeing in India. That's just one of the investment themes. I'll please let my fellow panelists talk and we can come back to the others.
Sure, point taken. Just to quickly wrap up the conversation, Vikaas, if I had to ask you, apart from equities, which are the alternate asset classes that look attractive at the moment? Private credit forms a very small part of the allocations right now, I believe less than 10% if you look at it globally. Is that something which looks interesting?
Oh, it looks very interesting. But, instead of extrapolating, let me just give you a background. I think there are three factors at play worldwide if you look at the macro situation. Change, rate of change, and global warming. Okay, change is enabling the fact that hitherto companies, industries, asset classes which were too small to be taken in care of, they are now getting more and more subscriptions. MFI is one of them. Rate of change is getting propelled by AI, the rate of data transfers, etc. So you're seeing multiple business models coming in. Now the next big global frontier is the green frontier. If one was to pick up a trend, we talked about data and she talked about CIBIL, and we can look back in hindsight and say that internet was a defining trend. What we're not realizing at this point of time is that the green frontier is a very, very big defining trend. And one of the things which will propel, we keep talking about equity investments, but private credit, especially in a country like India, is starting to make its presence felt. We run, for example, a real estate credit fund, which has been doing very, very well. And I can tell you that we enable builders to make the property more ESG compliant. There are certain metrics on which you work. Immediately, you will find that most of these builders can mark up their properties by 5 to 7%, and that adds straight to the bottom line. And private credit in India is just about starting in terms of the green frontier. So to answer your question, private credit in India, yes. If India has to grow, it is expected that another $50 billion worth of capital is required through private credit, and more so in terms of green private credit, if you will. So I think it's a fabulous, fabulous opportunity which is just about starting to make its presence felt.
Okay. There's paucity of time, but let me quickly toss it to Alok as well as Siddharth for this question. How do you distinguish a fad versus a real disruptor? And I ask you that because, for the last couple of years, for instance, we were talking about metaverse being the big thing. That suddenly went kaput. Whether we look at the green financing, at one point of time, it was all about wind. It went through its own slowdown. Now it's about green hydrogen and whatnot. How do you distinguish a fad versus a disruptor?
I mean, it's very simple. Business has been run in the same manner for thousands of years. So I believe in unit economics. When anybody comes and tells me stuff where, we should look at eyeballs and we should look at this and that, I feel those are fads. But when you stick to the basics of investing, the basics of how you run a business, that's where you bet on. So for example, what happens when an economy becomes from a low income to middle income? We have had examples of Taiwan, Japan, Brazil, so many countries which went from low income to middle income. And the sectors that did well, there's a reason why they do well, because people are no longer worried about roti, kapda and makan. They're now working towards aspirational sectors. So travel, brands, all of those become more exciting. Sports become exciting avenues where people are willing to put in the money. I think similar thing is going to happen in India. So you look at the fundamentals, you look at unit economics, you bet on only those things which you understand. You can't go to every party in town, so do what you understand best.
Siddharth, what about some of these traditional asset classes, cryptocurrencies and whatnots of the world? Are you looking at them?
I'm the wrong person to be asking that, no. But just to expand on, I think if you want to encapsulate the difference between a fad and a longer lasting disruption, I think it's time and volume of acceptance. I think the longer time it lasts, and in that time, the kind of magnifying volumes that actually adhere to that. I think that probably is a good indication. But crypto, the fact that it's called crypto bothers me.
Should we just rename and you'll buy it?
So for the renaming to take place, I think it should be sort of within the system of the institutions. So
right
till that happens, probably not.
Okay, but with that, we're completely out of time for this conversation. Thanks so much, everyone, for joining us here.